So I'd like to welcome you all here again. My name is Dennis, and I thank you very much for spending time with me here today. Today's workshop will be very important because of a few simple factors. It's going to be giving you a few very, very good tips on how to become an even better investor than you are now of the financial markets. The things I'm going to speak about today is trends, goals, rules, and of course trades. These are just some of the important things that I will just go over today, and I'm going to end everything with a couple of very important signals for you. And I'm pretty sure if any of you have taken the signals this week, if you stuck through them, you've made some really good money. But I'm going to clarify everything pretty soon about how everything is going. But before I begin everything, has anybody taken the trades? Is anybody still in the trades? Can you just give me just a little bit of input if you've taken the GBP trades, the USD JPY, the USD CADs, Euro GBP, Euro USD? Very good. Well, Patty, we spoke about that yesterday, and I told you to keep holding on to it, because even though it looked like it was coming back down, and it did, I mean, it even made a retracement of about 60 pips. Okay, Marius, I'll help you out with this right now. Yeah, and look where it is right now. It's right at that level where I told you to put your take profit at 144. We're right there. We're literally knocking on the door of that trade. So I really hope it can make you some money. Look, this is a high. This is a high because the last time price was at such a move was not long ago. It was just earlier this month, on the 17th of this month. So just over 10 days ago that's the last big push that everyone can see on the chart. I'm actually using the wrong computer to show you this. So I'm talking about this move here, the jump up here. So that's the last real push, and then we have the movement downwards, and then we have the buy. But this is a 1 hour chart, so let's just go to something bigger. It's not that then. Just give me a second, and I will just sort this out. Let's go to Marius. Marius, you said that you have a problem and you do not see the GBP USD move at all. Are you using the demo account or the live account? Live. Okay. And how is your chart looking like? There is nothing moving? The chart's not moving, or? Yours is at 4. Yeah, now it's okay. Okay, perhaps you were logged out. Maybe you were logged out. If there is no green button, if there's no little green circle over here, you might be logged out of the chart. Because I was here the whole time, and we're all on the same server. No problem. Okay, so let's head into this. Morten is asking, he's still in the EU trade, and he's asking, should we stay in it and should we get out of the GBP USD trades? What I would recommend you to do is just move your stops, basically your not your take profit, but your stop loss, move it into a profit, and let your trade breathe a little bit. And I would recommend somewhere around this area. So basically 6.0, just about here. So you can leave your stop loss here. That's you can move your stop loss there. That's about 30 pips away from your entry, and you should do something similar on the Euro USD, and you can put it somewhere here. I don't know how many pips you have right now. So So I would recommend something like this. And if you get stopped out, you get stopped out. I mean, at least you secure the profit, and you're giving your trade chance to gather you more money. So before we continue, I just want to tell you something very important. The reason this move happened is due to Janet Yellen, of course. But it's very important for you to note that there is massive importance on the non-farm payrolls this Friday. They're going to be really dangerous. So I'm telling you, they're going to be really dangerous. Try to avoid them. If you're trading them, allocate about 2% of your capital to that trade, no more. Okay? It's going to be dangerous. What does that mean? That means that you should trade smaller trades if you are trading. If you have, let's say, $1,000 in your account, open 0.05, things like this. Don't get greedy because you're here for the long run. If you're here for one day, then I'd just tell you to withdraw and go to a casino. You'll have more fun there. Here, you're just going to destroy your nerves. At the casino, at least you're going to get some free drinks, some free food. You're not going to get any free drinks or free food here. You're just going to get help. But if you put a lot of aggressiveness onto yourself, I promise you will go out. And one of the points I'm going to be speaking about today is the power of compounding. I'm going to give you more light into this. Oh, you're a sell. You went sell, you said. Morten, you're a sell, right? What is your stop loss? Can you tell me where your stop loss is? Okay. It's okay. Are you trading on a live account or a demo account? Live. Okay. Do you have a Skype account? We don't need a microphone. I've just sent you my Skype here. Add me, and then I will help you out with that one as soon as we finish this session. We will not need okay, great. We will not need a microphone. Okie dokie. So first things first. What I want to talk about right now is successful traders. I will summarize them in brief detail, and I'm going to speak about just a few very important things they have. Now, most successful traders will tell you that it's not so much about making money. It's more about growing as a person, growing your business to a point where it's capable of making you money. Now, you see, I use the word your business. When you're trading, you literally are an entrepreneur popping into the biggest market that ever existed in this world. And it's also the last frontier where an ordinary person or not so ordinary person can actually turn a relatively small amount of 1,000, 5,000, 10,000 into something pretty interesting in a matter of months and years and even weeks and days. But you have to get pretty good first. So what I'm trying to tell you here, it's a lifelong journey. And the journey is far more valuable than the destination. It's scientifically proven that we are more excited to watch a movie before we watch it. So after we watch it, we forget about it. Kids are more excited about eating ice cream when you tell them, "Hey, I'm gonna go buy you some ice cream." They're more excited then than while they're eating or after they eat the ice cream. So I'm just trying to talk to you about psychology quickly, and I want to explain to you all. The moral to what I'm saying is you need to think long term. You need to forget about the first Fridays of the month. You need to forget about today's and yesterday's and tomorrow's. You need to think way ahead. The way you're trading right now, can it sustain you in the long run? And I'm going to speak about market swings, the normal and abnormals, so you guys can understand what I mean about these things. Because sometimes things happen in the market that people say, "Oh, what the hell? It's I lost money because of the market." So many people will complain about these things, but it's their own fault. So when it comes to trading, just like anything else in life or any other kind of job, you need to take personal responsibility for your own success. You cannot owe your success to anybody else apart from yourself, because if you do owe it to somebody else, that means that somebody else, well, if something were to happen to that person, or you guys would have a conflict, forget about your success anymore. So what I'm telling you right now is that you need to take personal responsibility to grow yourself, your business. Like I said, you're an entrepreneur in this industry. You can really make a living out of it. You can make much more than a living. You can buy all the cars you want and you can do whatever you want. But it's not that easy. And I'm telling you, you need to enjoy the journey. Forex trading, stock trading, futures trading, all of these things can be really tough on the person, especially once you go full time. It takes a lot of time, it takes a lot of effort. And what I'm trying to tell you here right now is that it's not about the goal so much. It's about becoming the type of person that can accomplish that goal. So this is why I'm saying that you need to invest in yourselves. And you're all here, and I really love to see so many familiar names, people I see here every single time, and I'm really happy about this, because this shows to me that you are serious about yourself. You're really serious about doing something with yourself. Many of you have your own challenges and your problems, and I'm telling you that all of those things can be fixed. But like I said, in order to accomplish your financial goals in Forex and to learn how to trade and to improve yourself, you all need to become the type of person that can achieve those things. The type of person you need to become is a lifelong learner. I said this last time, and I said that the financial markets change, but they never change. So that means that we constantly need to improve what we're doing. And I use the word improve and not change. I use the word enhance. Keep improving what we're doing. I'm going to speak about many things today. I'm not going to take too much time out of your day, but everything I speak about is going to be really important, and it's definitely going to help you all very, very much. I just need to just 1 second. Okay. So the way you should look at trading is as it's pretty much your own business. You're basically a startup, and turning a startup into a successful brand takes a hell of a lot out of you. It requires excellent ideas, and ideas are trades. Risk management, well, that's, what it is. Obviously a lot of time, but the time's going to pass anyway. It's going to take a lot of losses, challenges, and so much more. Now, the first thing to do right now is pretty much go back to basics. And the first thing to do in basics is what we do in our mentorship program is that we create an investment plan. And I'm bracketing this as a business plan, because you're a business and you need a plan of how you're going to get what you want. You also need to know what you want. That saying, if you don't know what you want, how the hell can you get it? So we need to know what we want, but I'm going to talk about creating a trading plan in our next one. I'm just explaining you that it's important to have one. Many times the biggest part of a business is what kind of business it is. And what I mean by this is, what kind of an trader will you be? It's really important to know exactly how we're going to approach this. And what I mean by investor is two things. I mean, how much time can you invest into this, and how much money are you investing? The first one is the investment capital, money. Once you have the capital arranged, that's when the most important thing can be done, and that's risk management. Once we know the amount you're trading with, how much will you be adding on to your account? How much will you be withdrawing from it? Because I'm just going to get something clear over here. Most people think this way. And every time I've encountered these kinds of people, they never really made much money in the financial markets. Most people want to make an investment and then just keep taking out of an investment. And I don't mean this in asset management or something like this. I mean by themselves. People see something and they get lost in the idea that they're going to become a millionaire with $1,000. They can. Believe me, you can make 80 times more than that, or 100 times, because it's done. It's been done before. And believe me, even if it hasn't been done before, you can still do it. You all know the story of the 4-minute mile. It's been thought impossible, and we've achieved it. And there's so much more to it. But again, the biggest part of the business plan and what kind of an investment are you planning to make? Like I said, I'm talking about money and time. Investment capital. What is your investment capital? Once you understand investment capital, you can understand the risk management that you're going to use to this. Once we understand the risk management, we can understand the goals, logical goals, and also not so logical goals. The second thing is time management. This is so important because, and it's actually much more important than the capital investment, because this will actually create your trading system, the way you will trade. And this is much more important than money. Now, once this is done, you need to have, and I fully recommend having a mentor, and for you to be very dedicated to this, so you can continue growing. Fortunately, we give you mentors, and we're making something really big for this, and you're all going to have so much more interaction with us. And I'm really trying to take this to a whole new level, but we'll talk about this next time. Now, almost every investor you will speak to will tell you that they had a mentor at some point along the way. Everybody had to learn from someone. Some people choose to learn from books, others try to learn from seminars, others try to learn by themselves. But everybody has some kind of somebody that they look up to in some way. So you can pretty much find somebody that you admire, I guess, look up to, someone who's already where you want to be, and ask them for guidance to help you improve who you are and what you want to become. With their advice, you'll learn the best practices. You'll be challenged, and you'll be better prepared to succeed. Now I'm going to talk about the best charts to use to determine trends. I promised you we'll talk about this last time, so here we are in the next workshop, and we're talking about this. Now, most traders condemn charts, and the reason they do this is because they don't know the right kind of charts to use. They apply exactly the same rules to all time frames. Well, I mean rules and systems. They apply the same trading approach and rules to all time frames. They'll move from 5 minutes to 4 hours in a second, and they'll start messing around. There is a massive difference in these charts, because a 5-minute chart shows you so much more different things than a 4-hour chart, and an 8-hour chart shows you more than a 4-hour, and we'll talk about this now. But the charts that lose with the most money, and please listen to what I'm telling you, the charts that lose the most money are the short time frame charts, and this is a fact. People who use short time frame charts have always lost money. It's a fact. The reason that these charts move, the reason is that these charts move far too quickly and show so little information that is crucial. And what does this mean? When information is removed, that means that the element of time is eliminated. You have no idea what's going on. You can tell me that it's excellent for scalping and this and this and this, but this chart will not help you in any kind of way to make any kind of serious returns. Now, like I said, the reason that these charts do not make you money is because they move too quickly and they show much less crucial information, and this information will eliminate the time, the element of time. So short time frames make a lot of false moves, many false moves. And you're going to be opening positions like crazy. You're going to go buy and sell, buy and sell, buy and sell. And every time you look at the chart, you'll see a pattern. You're going to find a reason to open a trade. And what does that do? That makes you break one of the rules that we talked about. And that's the rule of, let me just find it, because we mixed them up. We mixed them up in numbers, but not to overtrade rules. If anybody remembers the number. Rule number 3, never overtrade. This would violate rule number 1, your capital rule. If somebody doesn't have the rules, please tell me so we can add them into the chat. Now, like I said, short time frames makes far too many false moves, and they'll always lose you money. The other charts that make the most false moves are the daily high and low charts. What I mean by this is many people Just a moment. Okay, I'm going to add them into the chat right now so you can all get them. Okay, here they are. Okay, now you should have them. So let's go. The daily high and low charts. The weak point with these daily charts is the fact that they show the minor moves, which are like pretty much like ripples in the ocean caused by pebbles. They do not disturb or determine the big move or main trend in any kind of way. The best charts to use to identify trends. Well, actually, I'm going to explain everything pretty soon to you. I just want to talk about this very quickly. The best charts to use for this is for this very important job are weekly, monthly, and if possible, yearly charts. If you're trading stocks, things like this, especially stocks that have at least 20, 30 years of life, then yearly charts will help you so much. Now, the weekly high and low chart is more valuable than the daily one because it contains 7 times more time. The monthly high and low chart is a better guide to the trend than the weekly chart because it contains pretty much over 4 times as much time as the weekly one and 30 times as much as the daily chart. The yearly, you know where I'm going with this, the yearly high and low chart is the best guide to the main trend, and if used in connection with the monthly chart, it will prove of the greatest benefit to traders and investors. Now, we don't have yearly charts here, so what do? You go to monthly and weekly charts. Now, the reason you should look over yearly time frames is because a yearly time frame shows you 365 times as much time as the daily chart, 52 times as much as the weekly chart, and 12 times the amount of time of the monthly chart. This is all measured by time, and time is essential to trading. And I'm going to talk a little bit more about past movements pretty soon, so you can all understand what I'm talking about. But we have a question from Abdul, and I'm going to continue with what I'm talking about. I meant on the daily high and low. The daily high and low is basically I will send you all a website once I'm done where you can find high and lows, so you don't have to look through them or do this. You can do this here, and it will tell you the high and the low. Okay, you see here it says daily high, but this you would have to do every day, and it would pretty much waste your time. So I will send you a chart of a calendar stating to you already the daily highs and lows, and this will allow you to set things like this in the market, and you'll be able to find pretty interesting entries. What do you mean just from what time to what time? You would basically get it when the US session closes. That's when you would achieve a whole 24-hour session of trading. So once New Zealand is opening and the US session is closing. Yeah, so that means the daily high, because that's the time element we would use. We would use a whole round trip, basically a circle of the markets. For example, New Zealand, US. So once the US session is closing, the New Zealand is reopening, because these two mark the start and finish of a market. Then we slowly go to Australia and Tokyo, actually. So then we have Tokyo, Australia. It actually shows you down here. So right now we're just in the New York session. So, but I'm going to explain this pretty soon to you, and I'm going to send you all a chart where you can actually see this kind of things. You're most welcome, Abdul. So, like I said, it's essential to look at longer time frames to determine proper trends, and I'm talking about moving into the last two over here, which is the monthly and weekly. And you guys should pay attention to this. If you really want to do something with trading, I fully recommend that you look at this chart at least twice a week. Because if you look at it twice a week, you will find something that most people will never find. You will find very strong double tops, you will find very strong double bottoms, and if any of you are still holding on to this trade that I sent out a while ago, you would be making a killing right now. And here it is. I sent you this when it happened. We were on the second candle. So that's 500 pips already, approximately, and it's going to keep going more. You just have to find the right entry, and that was the right entry. So the weekly and daily high and low charts are valuable. They're very, very valuable. And they're especially valuable for the Forex markets, because the Forex markets are very active, especially the majors. Now, these weekly and daily highs are very good to use on most major pairs. And the best time to use them is on major support and major resistance levels, because the daily and weekly charts will actually be the first to show you a change in trend. Because you see, the monthly chart is showing us something huge right here. Huge. And once I finish this session, I'm going to show you something, and you guys will hold me to my word for a very long time, throughout this whole year. And it's starting. I felt it today, and we made excellent returns. And two people in this session will be very happy, and that's Mr. Cat over there. You're going to receive a very, very nice report, sir, very soon. And we have a lot more happening here, but I will show you all of these things later on. There's some magical things happening in the market this year, and I really, really, really hope that we can all come on board to it, because if we do, as a brokerage, we're going to be the highest earners in this industry. And I don't mean that as a brokerage to earn, I mean like client-wise. So, while I'm speaking about massive movement in the market this year, I want to quickly take your attention to something very important that will be happening this year. And that very important that will be happening this year are a few major events. These major events are the Brexit scenario, which most people were saying that the GBP USD would head south and it's going to get battered and it's going to get destroyed and blah, blah, blah. And I've sent you a message, an email on that double bottom scenario over there that other people were calling a head and shoulders. I sent you that out, and since then it's moved almost 300 pips, and there is still room for it to keep going up. And we're right now at the 44 level, which I told Miss Pavi yesterday that would be her target today. Pavi, I fully recommend, if you didn't close your position, by the way, to move your stop loss to about 143,500 and let the trade ride, because we're still not at the peak, and the peak is our 25% level. And if you guys have marked it, if you guys have marked the percentages as I do, using this, we're going to just do it over here. I'm just going to show you the 25% level. Because we still have room to move over here. The last time price did touch the 25% level, but I just want to go into this very quickly. So here it is. You see, we're still pretty far away from it. We still have plenty of movement to go towards that level, and I just want to zoom out. So this is the area that I'm telling you that we can reach pretty soon, and even the 45 over here could create us a very strong double top, or we could finish up with a head and shoulders around this area. And that means this. If price breaks this level, we're looking at further gains north, and we're talking about this level first. That means once price comes here, you move your stops to about here. Basically, you want the stop to be at the 50% level between this and this. So you look at two targets, and you choose the 50% level of these two targets, and that's where you put your stop, which is pretty much almost spot on. So that's what I mean. But I'm going to speak about fear and knowledge right now. What do you mean, Pavi, down on the euro? You mean to sell euro GBP or to buy euro GBP, or? Yeah, Marius, I know it's pretty bad, but it's gonna get better. Not now, but around in about 10 years, something like this. But that's okay. I mean, what I mean by this is you have excellent reasons to start kicking some ass and help yourself and others around you. Pavi, what do you mean? Buy it or sell it? That's what you mean. Euro USD. I'm going to make an analysis on all of these pairs once I finish speaking, so you will all get an idea of what to do. There's no need to rush into anything right now. There's plenty of trades. Yes, the first email was to buy Euro USD. The second one was a more long-term scenario. One trade was short-term to buy. The second one's medium-term to sell, and the third thing is long-term to buy. And I'll explain this pretty soon, in about 15 minutes. Thank you. So, I'm going to talk about fear versus knowledge right now, because this is a major stumbling block for many traders in this industry. But you just have to give me a moment. I just have to close some positions on the other side. Just a second. Okay. Just a moment, everyone. I'm just... Okay. Marius, what do you mean? What do you mean? Yes, it's a very nice sound. I've been hearing it all day. In fact, I'm going to just pull out a statement from today, and I'm going to send you all the statement very quickly. You can open the statement with your normal internet provider. This here, no, don't bother with this. Don't bother with this. This is the only reason this is here is because I don't use this computer for trading. This is from CBOTs, so you don't need this. Forget about that. So once we finish this, I'm going to send you the statement that I have here. I just have to log on to Skype onto this computer. So, fear versus knowledge. Fear is one of the great causes of losses in the financial markets. And in fact, fear is not only the cause of troubles and misfortunes in the financial markets, but it's also the cause in many of the life's doings. Even the Bible states that you shall You shall know the truth, and the truth shall make you free. You've heard this in movies. The truth is going to make you free and things like this. And the truth is knowledge. In reality, it is, because if it's not the truth, then it's then it's a lie. So the truth is knowledge, whether this is scientific or otherwise. And when a person has knowledge, this person, he or she, sees and knows and does not have fear. So I'm going to say this again. The truth is knowledge, whether that's scientific or otherwise. When you have knowledge, you see and you know, and you do not fear. With knowledge, my friends, a person does not hope, because he or she knows what will happen, what the worst case scenario is. And here is the perfect example. We are coming to a decent top on Euro USD of this little, let's say, pretty much a downward flag, but this looks like this is going. I'm going to speak about this soon. I'm just so excited. I want to tell you from now. Okay, so in this scenario over here, we had a double top at this area, something like a double top. Price moved downwards. This is a weekly chart, and we can see price head in the coming sessions pretty much till up here. What does this mean? That means that the NFP technically can be pretty weak. Okay, and I'm going to speak about this more to you on Friday, because Friday is NFP day, and on Friday we have another workshop which you all need to register for, so you can be there. If you don't, well, we can send you the recording as well, but it would be good if you're there, because it's going to be the European session and we're going to be opening a lot of trades. So what I'm trying to tell you here is, like I just said, with knowledge, a person does not hope, because the investor knows what will happen. And how do you know what will happen? You can't really predict when you're going to get out of a trade, because what we do here is we add stop losses to everything. That means that if we open a trade over here, if we open a trade right here, and we put our stop loss right here, that means that this is the worst case scenario. And if you know the worst case scenario and you're fine, you hear me guys, you need to be fine with the worst case scenario. If you're not fine with losing $912, you don't open this trade. It's a recipe for disaster. You'll destroy your mental state. You'll never open a trade again. And when you do, you're going to have so much fear inside of you, and you're going to make so many mistakes. So how do we limit this? We open a smaller position. If I'm not fine with losing $900 in a trade, if I'm not fine with losing that much money in one trade, then a similar scenario would cost me about $400. So you ask yourself, is that good? Can I handle this? How many trades can I open like this and lose? Because I need you to look at the losing scenario first before the winning scenario. I want you to embed in yourself that if you open 10 trades and you lose every single one of those trades, will you have enough money to continue trading? And the last thing I want you to do is invest more than 20% of what you actually physically have saved. Okay? So if you're not comfortable with losing 400, you go down. And you keep going down until you find a scenario where you're going to let your trade breathe properly and you're fine with losing. Most of us are okay with losing $100. We spend that much in a grocery store and many times much more. So $100 is fine. You open that trade and you don't be greedy, because greed is going to destroy you. Most people have greed because they want to make money far too quick. And the reason you have well, not you, but people have greed within them is because, just a second, because they don't have a long-term vision. I have a long-term vision. My vision ends in October. When that vision comes to an end, I'm going to stop trading and I'm going to create another vision, another goal, another stepping stone, because they can't ever end. Like I told you, that's that state of psychology. Uh, before you eat ice cream, before your kids eat ice cream, they're more excited than when they're eating it. You are more excited about watching the football game. Well, unless you win, so that doesn't make much sense. But it's. I'm sure you guys understand what I mean. Just a moment. Just have too many trades over here, so. Okay, just a second. Okay, so you understand what I'm saying. When you have knowledge versus fear, once you have knowledge, you know the worst case scenario. And when you know the worst case scenario, you do not hope or fear of what will happen. You just know. You're prepared to lose $100 and you're prepared to make a win. Once you have sufficient capital, you start compounding this and so forth. I'm gonna just give you a couple of insights of, and many of you will relate if you've traded before. How many times did it occur to you that you are short over here? You go sell over here, but price goes up, 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 and it's over here, and you're now 130 pips in a loss. Many people will close their position there, and without knowing that this is a top. This here is a top. Now, why do most people sell out stocks, for example? I'm going to talk about stocks and then more related to Forex. They sell them out at low points. For example, if this was a stock, if Euro GBP USD was a stock, many people would start selling out the stock here, and the stock would start dropping a little bit more. The reason they do this is because they have fear that the stock will actually go even lower. Now, if they knew that there was the lowest point, and here it is, the lowest point, and we're at it right now. I'm just going to have to remove these things here, and I'm going to mark it with the green marker. Lowest point, okay, this is our lowest point so far. We've set it recently, but if we move it like this, we realize that price even reached down here, 135. What happened right after that? Bounce back, bounce back, bounce back for 3-point-something thousand pips, and it's been in this range. It's been in this range. Came to the 87.5 level and started dropping. We are now roughly around the 35 area. We're close to it, and we have excellent chances of moving higher. And I'm going to talk about this later on. But if these people knew that they just finished the lowest points, that's the lowest point, they would not have much fear, and instead of selling, they would actually buy some more stocks. The same applies for tops. Many people start selling out the tops. When price reaches a high, they start selling out. The reason they start selling out is the same. They have fears of price heading lower. But many, many, many times, price will actually break that top and make a new one. So, when traders are... actually, I'll explain to you a bit later on. I'm going to show you scenarios on the chart of how tops and bottoms work well, and how you can use all of these things to your advantage. So what I'm trying to tell you here, to succeed in the financial markets, hope and fear must be eliminated. The only way to eliminate those two imposters is to get as much knowledge as you can. So if you're serious about trading and investing, you really need knowledge. And I can list 1,000 names over here. People who've had nothing, and we've had so many better chances than them to do something, but they're the best in their profession. From Messi to Michael Jordan to Tiger Woods to Novak Djokovic to Walt Disney to Albert Einstein. All of these people are committed. They were committed to doing something, and some of them still are. And I can name you much more people than this. You know, Walt Disney, and I'm pretty sure many of you know this, This guy's had more failures than we've had losing and winning trades combined. He was fired from jobs for lacking imagination and had no original ideas. Mickey Mouse was rejected because it was too scary. The Three Little Pigs got rejected because there were too few characters. You know, it went from stepping stone to stepping stone to stepping stone. And even rumor has it that he's rejected, turned down 302 times. Harrison Ford, Sylvester Stallone, J.K. Rowling, Donald Trump. Donald Trump. Let me just tell you just very quickly about this gentleman here. Did you know that Donald Trump was once $1 billion in debt? He owed $1 billion in the early 90s. That's like owing $5 billion right now. Just look it up. Newspapers, everybody was saying that this guy was done for good. And pretty much we would also say this as well right now, because who the hell can get out of a debt of $1 billion? How can you physically, logically get out of a debt of $1 billion? You know, I read this today actually, that one day he said to his daughter who was sitting right next to him, broke, he pointed at a homeless man and he said, "You see that guy there? He has $1 billion more than me." That was literally the lowest point in this man's life. Then he made the biggest turnaround in financial history. There's never been a bigger one. He even holds a Guinness Book of Records for this. I don't know if you guys know. He was once $1 billion in debt, but now his net worth is just over $4.5 billion. So, you know, there's so many more people, Michael Jordan, Albert Einstein, like I can talk to you about these people over and over again. And people from the States who are watching us here, well, you know about Abraham Lincoln, we all know about Jim Carrey, we all know about Stephen King, Thomas Edison. All of these people went through massive failures before they've done something. So, what I'm telling you right now is you can literally be whatever the hell you want to be. You want to make $1 million here or $1 billion, you can do it. But it's not going to be that easy. And you should be happy it's not easy, because you're going to become an excellent individual by trying to achieve this goal. And once you achieve it, you're halfway there. You've got to set another one then. So I'm going to talk about a couple of things here, but I'm going to take any questions that you might have right now. Do you have any questions for me? I just want to note something very quickly over here. I just want you to note something, and I'm going to show this to you right now. There is a trend line occurring right now, and we're hitting on it right now. So we're somewhere right about there right now. Or it could head a little bit higher, but there are chances it will break this level, but there are also chances it will go downwards. And what I'm trying to point to you right here is head and shoulders formation, but we'll talk about setups. I just want to put everything into place. Okay, great. Thank you, Craig. I'm going to talk about normal and average moves right now in the market. And you all need to pay very close attention towards what I'm saying. You should study the daily average moves. I'm telling you, I'm giving you an excellent suggestion right now. If you're reading a book, you're doing something, stop. Do this first. You should study the daily average moves, the weekly average moves, and the monthly average moves of each pair that you are trading or intend to trade. It is important to know the normal, average, and abnormal moves that a pair makes. That way you'll understand excellent trend channels of daily prices, monthly, and weekly. Now the abnormal average moves do not come close together and pretty much do not last a very long time. An abnormal market move is this over here. This is an abnormal market move. And that's why it corrected straight away. Price stays within our boundary of this here. And then we have an abnormal move. Basically a fake out. Bounce up, bounce down, and we remain within the boundary. Once we came here the second time, we shot down. That means these are all normal market moves. You see, this is an abnormal move. They usually last, like I said, not very long, and they happen very quickly, and usually they do not happen close together. What I mean close together is if it breaks out of here, it's not going to do the same thing. It's going to shoot up towards the 120. Suppose, let's say you were trading the Euro USD. You should have, now I'm telling you what, if you're going to do something like this, I'm going to tell you what you should have. You should have its entire history and know exactly what was the greatest move it made between each high and low in any month or in any week or in any day. You need to know the currencies better than your football team. You need to know the currencies that you trade. You really need to know them. I know it's very hard to do. Believe me, I know it's really hard to do. But you're here and you want to do something serious with this. That's the reason you're spending time with me right now. And I'm telling you right now that if you want to achieve something in the financial markets, and you never had anything in the financial markets, and I promise you can achieve massive results. Massive. I'm talking about 20, 30, 50, 60, 100, a million in a trading session. You can do it. But you need to do things that you've never done before. For example, literally doing this. Going back in time, and looking at your favorite pairs and understanding why they moved, where they moved, tracking it down, how many times they moved between things. Also understand their high and lows throughout weeks, months, and days. I know this is very hard to do, but it's knowledge. It's the exact thing I just spoke about a minute ago. Fear versus knowledge. You need knowledge, lots of it. Once you have knowledge, you have no fear. And I'm telling you to gain knowledge, and I'm telling you how to gain it, and I'll explain it a little bit better soon. When you begin to use this kind of knowledge, you'll be rich. I mean, I just have to say it directly. Forget about rich. You're going to be smart, wealthy. You're going to know exactly what you want, and you're going to get it every time. Now, to begin off with everything, just go back for a year or two from where basically you started trading, from today or from when you intend to start trading live. All you have to do is get its average moves for days, weeks, and months, okay? So that you will know when it breaks into activity and starts into abnormal moves, up and down. These kind of movements can be predicted. Look, I'm going to be speaking about all this pretty soon, but what do you think? How do I send you that Euro GBP is on a double top and it's going down? Euro GBP or Euro USD. I told you it's going up, and I didn't rush into telling you. I told you somewhere here, I think, or somewhere here. I don't remember. It was not here. I think. Anyway, we have a question. Yes, very correct. Very correct, Peter. Very correct. Okay, so what I'm saying is go back for a year or two, get the average moves for days, weeks, and months, and this way, pretty much you'll start understanding the pair more. Why is it important? I'm sorry, I'm just looking at the market and I got confused. So, it's very important for you to feel the market. You know, like I know I'm gonna sound like some kind of monk, but you have to be one with the market. And to become one with the market, you need to understand it. You need to get as much knowledge as possible on it. And believe me, you're not gonna find much in books and things like this. Certain books are excellent. Others are just repeating each other. So, and they're speaking about silly indicators that will never make you money. So, study the volume that occurred on these moves. Basically, what I'm talking about is look for double tops, double bottoms, look for resistance levels and support levels. And once you find them, once you find these moves, you will achieve something amazing. And that is, so look, what I'm telling you to do right now is to look at patterns. Go back a year or two. If you have the time, go back to the beginning. Look at patterns, how GBP USD moves. Start with euro dollar, it's the most interesting one. Look through it, look at it, and look at double tops, look at double bottoms, and that way you will understand much better how, well, you need to look at the volumes as well. And when you look at the volume that occurred on these moves, especially the tops and bottoms, you will really understand what kind of stop losses you should use on these pairs, what kind of profits you should expect, and so forth. Many traders make success in trading while it is making normal swings. What are normal swings? Normal swings are this. So normal swings is this. Price goes up, price goes down. Price goes up, price goes down. Price goes up, and then it shoots through, and this is an abnormal swing. So most traders make a lot of money trading in normal swings. And then just as soon as it goes into an abnormal swing, they lose everything they made and lose pretty much everything else they had. And the reason they lose all of that is because they hang on to losing trades and they do not use stop losses. I want you all to remember that you can always get into the market wrong. Every trade idea can be wrong. And the way to protect yourself and keep from getting out wrong is to use a stop loss. Ladies and gentlemen, it is financial suicide to get into the market wrong and then get out wrong. And what I mean with those words is to hold on to a loss until it runs into an enormous loss, when you could have taken out just a quick, small, painless loss. Yes, Martin, we sent 2 emails. I will explain about this pretty soon. I sent 2 free emails about Euro USD. I sent 1 up, 2 up, and 1 down. But I will explain pretty soon about Euro USD and about everything else. So what I'm trying to tell you with this point here is that you should always protect your capital with stop losses. And the second point is learn the pairs you trade. Okay? It's not enough just to trade them. There's another point that is very important, and that's all tops and bottoms. All tops and bottoms are essential. That's what I'm saying is going back to history. The greatest value, one of the greatest values in using longer time frames and studying chart history is to enable you to know where previous tops and bottoms have been made and when the pair has crossed these old levels. Once you know that pairs have easily crossed these tops and bottoms or have bounced from these tops and bottoms, you'll have something great. The importance of charting will using charting this way will allow you to see things most other people don't see. It will allow you to literally go inside the 5% of traders, even less to the 1% of traders. Now I'm creating a video on charting, the importance of charting, and it will be released pretty soon. It just takes quite some time. So Abdul is asking a basic question. To the left of the chart where he sees GBP USD, it says plus 123. What does this mean? That means that it's moved that many pips, 130. or 0.9%. Right now, this is right now where it is from the daily open. That means since it's opened, it's moved that many pips so far. It's moved more than that, but just a moment. Okay, you're very welcome. So I'm going to talk to you very quickly about the power of compounding. Compounded returns really make a massive difference in this world. And I'm going to use something as small as 5 and even 10%. Most people think these are very boring returns. But over the course of months, years, and decades, this stacks up to something amazing. Let me give you an example, a small example of just 35 months. Let's say you have a $10,000 balance. And you, let's say, I'm going to use add-ons here. Let's say you add on $2,000 per month to that account with a 5% return, only a 5% return per month. After 35 months, the total contributions, all of this equals the total returns with your contributions and everything else. The end portfolio value is $235,800. That is a return of $155,000, which means 195% ROI in 35 months. So I'm going to use another example over here. And the example I'm going to use is 9.6% return per month. You start with $10,000 and you only make 9.6% per month. After 35 months, your gross return is $661,930.11. That's 827%. Just a second. Starting portfolio, example B, $10,000 with a 9.5%. Just give me a second. This is it. That's example 1. And example 2. Sorry, this is example B. And here. Here they are, both. You see, this is the power of compounding. This is getting something very simple and pretty much easy to achieve and turning it into something amazing. You will all live. You will all live 35 months more. We will all live. Well, Peter has an excellent point here, and you do every single time. Peter says that unfortunately most people can't wait 5 years. That is what we have to learn. Patience. Very correct. You see, when it comes to trading, look, the reason I became good at trading is because I backed myself up into a corner. I gave myself absolutely no reason but to succeed. I put myself in such a tough place that the only way to get out of that desert and go into the green grass was to keep going, you know. And there is a saying that states that, I remember reading this somewhere, and it said that if you're going through hell, keep going. Winston Churchill said this. He said that if you're going through hell, you got to keep going. So that's what I did. I just kept going. I kept learning. I kept practicing. I kept losing and losing and losing and losing and losing and losing and losing so much that I just couldn't take it anymore. And I realized that if you have losses, that means what you're doing is wrong. The way you're approaching things, especially the mindset. I went back down to basics, and sometimes on a daily basis I clear more money than I used to clear in 4 years of working for someone else. So that's how it works. It's like magic. So, here's what I wanted to tell you. The lesson learned to this is that the earlier you can start investing, and I say the earlier you can start investing, with a proper trading system and risk management, the better. The reason I say you can is when you can. If you have $1,000 in savings, I would not recommend you invest for your personal trading more than 20% of that. That means $200. You can really do something nice with $200 if you back yourself up into a corner. If you back yourself up into such a strong corner, I promise you that 200 can become 2,000 in a matter of a month with ease. Because all you would have to do to make this return is make 9.6% for 35 days and not every single day. You can do it in 2 months. You can make 827% in 2 months if you trade half the month. So only 35 days in 2 months. You'll make this much. You can make much more because every day is different, and 10% in this industry is not much. The idea is just to get the correct trades in and use the correct risk management. So I'm willing to take any questions now, and after I finish with these questions, I'm going to show you some trades. So we have Beauty asking how to calculate the average for the year. What do you mean the average for the year? Peter, did you receive the report last Friday? Okay, well, I'll send it to you personally. To scroll back on the chart, you can drag and drop, you see? If you just click the mouse in, you'll be able to move. So basically left click the mouse and then you can move. The best thing to do is zoom out fully and then move where you want to go, and zoom in and move, zoom in. Is that helping you, Beauty? Marius, yes, using 0.01 is fine. You're using a free 30 to 60 pip stop loss. Let me just a moment. Continue using 0.01. You need to get the feel of everything. So basically, when you're using about 1 point something percent risk. You're using 1.3 probably. You're using about 1 point. Yeah, look, this is fine. You can. No, your risk management is perfect. Don't put your stop losses much higher than 60 though. Keep your stop losses there. But you could even Beauty, I'm going to send out the averages, or they're already made. To calculate them would be very, very hard to do. You would have to to get them all. So it's better to actually go to a website that already has them ready, and then we can just take them from there. But I will actually send this to you all in an email, so you will receive the daily highs and lows of weeks, months, and years for about the last 2 years, and then the rest would be a bit hard to achieve, but there are websites that provide this. You're very welcome. So what I'm going to talk about right now is just a few things that I already sent you all. I'm going to send you all them. Kato is asking for the compounding spreadsheet for the calculations that I can hand out. I don't have it on this PC, and the Skype is switched off, so I can't transfer them to the other one. I will have to send it all to you all in an email after the session is finished, so you can have that. But there are websites that you can go to right now and use them as well. But I will send something to you. It's similar to this. Okay, so the trades that I spoke about, that I want to show you first. I told you in the last session, whoever was here, I said AUD, USD, buy, right? It's even in the recording. I told you to buy AUD, USD. Told you to sell USD, JPY. And that's on the website as well. Let me just go to the website. You're very welcome, Kato. The reason I told you to sell USD JPY is because I said that JPY is much more stronger. Well, at this point. Hey, somebody just sent a message. Can you resend the message that you just sent? Because I closed the sheet by mistake and I couldn't see what you said. So I want to just talk about these pairs very quickly. I sincerely believe that the GBP very soon will skyrocket. I'm talking about a move at least till the 46, even 47 area in the next month to 2 months. And then in 3 months' time, when the referendum finishes, we can see the move go even higher to, and I'm going to mark this as a box, towards this area here, inside the blue area, okay? So Beauty is asking about the equity booster. No, you can use the same account for the equity booster. And I'm going to explain it very quickly right now, just so you all understand. I want you to look at my balance and my equity, and I will just add the equity booster to my existing account. Okay. So I'm going to add 100%, okay? Just like what we're doing. So you see my equity is now 121,000 and my balance is 60,000. That means that I have a much more powerful free margin. And every time I open one lot, I don't have to open it like this, one lot, but I can open 0.2, 0.2, 0.1, 2 $2 will be converted from here and sent into my balance, and you'll be able to withdraw that. So this is just like compounding. The more you do it, the more you'll receive from it. But I don't want anybody to rush from this. Craig, that really sucks, but we'll help you out. We'll help you out, and everything's gonna be fine. So what I'm telling you right now on the GBP here is that it's going to be heading up, but you will receive a better detailed email report about this. You will receive an email report from this. I do not recommend anybody rushing into anything right now, even though I can pretty much see the GBP heading towards this level here in the coming days. Possibly after the NFP breaking this area, but let's not talk about the NFP too much because it's not around yet. I think that Euro GBP was too overpriced, and I told you this when we met. And I've sent out the signal at 179 to you all, which was right about here, correct? This didn't move that much, but it still generated a about 60-something, 70 pip move. I still think that the GBP got very battered by the euro, even though the euro will have exactly the same consequences if the UK leaves from the European Union. And I think people are starting to slowly understand this, and that's why this will head south, but I do not want you to get inside these trades yet. You will receive an email when the good time arrives for this. We have a breakthrough over here, but there's still time for it to keep going down. USD JPY, I still believe that price will head down, even though this move happened pretty late and it's not that big. So I do believe that we will have a strong yen. I also believe that AUD USD will head a bit more higher, and I told you this last time. I don't know if any of you taking the trades. So you see, once you receive the booster, it's going to pop up here in the platform, and it's going to tell you how much you have and basically how much I'm going to convert from this into balance. But I guess that's pretty much it for now. I've kept you guys here for 1 hour and 20 minutes already. I'm going to let you all go and let you enjoy your mornings, your evenings, and your days. But before I let you go, as always, do you have any questions for me? David, yes, I think so. I believe that there will be very, very strong movements. But again, I don't recommend you opening the trade yet. I think that you should all wait and just give me a couple of hours, about 24 hours, so I can give you better indications of where price will be going. Well, Beauty, you can just contact contact support, and they will help you out. So if any of you are interested in learning more about the booster or even receiving the booster, I've just sent the support email to all of you. You will receive it there. Peter, I'm going to send you an email right now, me personally, because somebody else was supposed to do that. But I will do it. And in regards to the trades, you will receive an email tomorrow. I deliberately didn't want to do anything today because we were going to have a session. Like I said, there is a very strong trend line over here, guys, and I need you to pay attention to this. And there looks to be a lot of momentum on this candlestick, because before, when it reached these levels, price was already too far away. Price was already too far away. We're looking at the Euro USD right now. Price was too far away. That didn't allow the momentum to actually break this level. We could have a break, but just wait for it. You'll all receive an email. You'll all receive an email by tomorrow. And can I just ask, are you all receiving the email from info? Because I think there's a few people that are not. I spoke to a few people and they're not receiving well, this crucial information. Hey Lisa, it's good to see you. It's really good to see you here. I didn't see any questions from you. I thought you didn't come today. Well, I'm very happy to see you here. I'm really, really happy that you came, and I'm really happy to see many of you. Rick, thank you very much, sir. I'd love to have a call when you can one time. Marius, do you mean for Euro USD? No, I don't. I didn't mean today. I think it's pretty much finished for right now. There are no major banks that are doing any crazy trading right now, and usually most of the moves happen in the European, while the European or UK sessions are open. Just so you guys know. Okay, everyone, thank you so much for coming. Um, I really appreciate it, and I really wish you all the very best here today. Happy Easter to whoever celebrated, and I'll see you tomorrow. There is another one tomorrow. It starts 1 hour before this one here today, and I'm actually gonna send you the link right now to your to the to the message board. So you should all receive it. Okay, you all must have received it. Kato, thank you so much for coming. Pavi, thank you very much for coming. Peter, thank you. Beauty, thank you. Abdul, thank you. Craig, always a pleasure, my friend. David, you guys are all amazing. Sebastian, you too, my friend. Bye bye. You have a good night. Thank you, Stavros. Bye, everyone. I'm shutting down.